This conference will now be recorded.
Good morning, everybody. This is Greg Morton. It is Sunday, March 12th, 2023, and this is the weekend video update for Canslim growth stock position traders. So as always, this is for educational purposes only, not recommending any stocks or securities to buy or sell, and we always want to learn first and only then invest. So today we're going to look at the M factor in the current market review. Last weekend I said, welcome to the roller coaster. This weekend it's welcome to the train wreck. Talk about action plan thoughts currently, which is don't. We'll look at some charts, and then we have our educational monthly meeting coming up this Thursday, March 16th, 2023, and I'll show you the agenda for that in case you're interested in attending. So as always, we start with the M factor. O'Neill teaches us to diagnose or interpret, not to predict. We look at the action of leaders. Even if you missed the Canslim stocks that broke out, it still gives us clues on the market direction. I think ALGM is about the only breakout that is still holding up well since the January 6th follow through day. There may be another one, but that's the primary one that I see. We'll look at actions of stocks owned, which is pretty much just back to nothing on the long side in the group teaching portfolio. We'll look at the market pulse, distribution day count, price and volume on the indexes, which is all encapsulated in the coloring book, which of course I share on Twitter most days. So bottom line, it has and still is a tough market recently. The breakouts and the gaps in Canslim stocks since the follow through day on January 6th have struggled. I have 43 total on the list. The vast majority has stopped out or are struggling to get traction. Again, ALGM being sort of the rare exception. I had URI in last weekend's video as another one that was holding up, but it is back to only 3% from the pivot. So it's pretty much round trip its gains. So last weekend's cover slide was this. Had a lot of questions. Those questions got answered this week, and the diagnosis as of 4 p.m. Friday was bad. So let's hop out of here and look at the charts and the coloring book and the group teaching portfolio. So we'll go to the coloring book. Oops, sorry. Coloring book first. Oh, I'd scroll back. Sorry about that. So currently, lots of red. Distribution mounting, of course, these are in white because IBD quits counting once they go into incorrection, which they did on Friday. I still count within the 25-day window going back to the orange dot because I just like to know how much distribution the market's carrying. So I only have 6 buying days and 13 selling days. I mean, this switched and sure got ugly quick. I mean, it was about the opposite just a couple weeks ago. Again, we have 5 distribution days on the NASDAQ, 6 on the S&P 500 and the Dow. IBD went back to red or in correction, and the power trend went under pressure on Friday. And we have 4 days of net new lows. We've had 2 really bad selling days. I put the red border around those. Distribution times 2, distribution times 3. NASDAQ was down over 2% on Thursday, 1.7%. 7.6% on Friday. We had Silicon Valley Bank failed, which we'll talk more about that in just a minute. And then in the coming week, we have CPI data on Tuesday morning. We have quadruple witching on Friday. We have the Fed meeting the following week. And then we have the bank failure issue, which is going to be front and center on Monday, and I assume a couple days following that. So pretty ugly there. If we jump to the group teaching portfolio, oh shoot, Google does that. The data feed's not in there. There we go. We're only 13.4% invested, and only about half of that's on the long side and about half of it's on the short side. So we have 1 partial long position left after Friday, which is Axon, and then 3 short positions. So just not much exposure again to the market at all. I think IBD is saying somewhere between 0 and 20% invested currently. after last week's mess. So we're sort of within that zone. And again, half that's on the, almost half is on the short side. So tough year, tough to make any progress so far. The shorts are performing the best. About all I can say on that. So go back over here. So we looked at that. So current market sign for me is, of course, back to the train wreck. I think this guy's on the phone calling Jay Powell. So Houston, we got a problem. And you got to add in the bank failures. So yeah, I got Silvergate and then Silicon Valley Bank on Friday. Seems like a really big deal as the FDIC takes over. It's the first bank failure since the 2008 financial crisis. So 15 years since this has happened. And this one is the second largest one ever. So a lot of news about it this weekend, a lot of uncertainty. And ironically, this is due to investing in part in long-term mortgage-backed securities. Hello, back in 2008, really? So they put all this venture capital deposits, and I kind of was joking about that on Twitter yesterday that really the depositors were lending their money to the bank to go invest in mortgage-backed securities. They paid 1.5%, which looked good when the Fed was at 0% rate, but these were long term. You can't cash out early, and they don't look good now at all. So basically had to run on the bank. You had some hedge funds telling their clients to take all their money out. They did that. So the bank got a margin call by its depositors, which were actually their lenders. Um, so it's just a mess. So we will see what happens. This is just massive uncertainty, and we know uncertainty drives volatility. The market hates uncertainty and it struggles with it until the uncertainty is clarified. We're definitely not there on this bank issue that's come up, and then it can price it in. And it just seems like there's a lot of multiple ripple implications here. In fact, I just read this morning, I had no idea, there's a Silicon Valley Bank in the UK. So the regulators over there are dealing with it this weekend or getting ready to deal with it on Monday. So just don't know what's going to happen. Current trading plan, in my opinion, no increased exposure on the long side. Everything in that coloring book is red. There's just no reason to dip a toe in the water because the water's full of piranhas right now. The Fed's got a serious predicament. I think, based on what I've been reading, you got this large bank failure, potential run on smaller regional type banks. The next 24 to 48 hours is going to be very revealing. It's going to drag out longer than this, but some big things are going to happen one way or the other. And back during COVID, I remember the Fed had an emergency meeting on a Sunday and a 1% interest rate cut. That was March 15th, 2020, 2 years ago this week. Who knew? So I don't know what they're going to do. I have no idea. There's no way to predict. It's just, I it's hard, difficult to imagine increasing exposure on the long side until some of this gets resolved. And the short side, people that already have some shorts, experienced investors, um, good, I guess. And we'll just see how those play out and maybe further opportunities there again for people that are experienced with that, because that is a difficult area also. So always do the weekend routine work. It's just the time for patience and discipline until we see some improvement in the M, and we need Canslim stock setting up in full and proper basis. Last week just hung a lot of ugly weekly bars on a lot of growth stock charts, as well as poor daily bars, but outside reversal weeks in a lot of cases on some good names previously. Still a lot of headlines to come. Again, I already mentioned CPI comes Tuesday. We'll have quadruple witching, which comes once every 3 months on Friday. And then you've got the banking issues. And then we have the Fed meeting right after that. So we'll look at a couple charts. Go back to Market Smith. And I didn't go through the index charts. Sorry, meant to do that earlier. So we look at those. these are just bad. High volume, lost all four moving averages on the NASDAQ, on the S&P 500, on the NYSE, same thing. You just got these arrows plunging down, low range closes. The sellers are totally in control. Russell, all four. I mean, all six indexes have lost all four moving average lines. It is not a good environment. And if we look at the NASDAQ on the weekly, um, you can see here we had three legs down, and this banking issue, who knows? Is this going to be a magnet down to 10,000 or below, and be a fourth leg down with capitulation selling? We're 16 months into this bear market. That is a long bear market. So not constructive there. And then just for fun, look at I had five stocks on my top tier watch list last week. So we'll just look at daily. So Lantheus tried to break that slope and trend line, came back below it. MPWR tried to do the same thing, break a slope and trend line, fell back. Fortinet, kind of still setting up in a handle area. It's not terrible there. Palo Alto Networks, trying to set up a handle, a little shelf area. MCHP, just still in this cup with handles. So we'll see what those do this week. Axon, holding up 10% from the pivot, probably was 15%. So watching to see if it round trips. Dexcom, terrible, came back below the 50-day. So just not. And then IPO, Next Tracker, just super choppy and came back and stopped most people out. So not a lot of good stuff there. We're still in EPS season. Of course, it's wrapping up. Really, a scratched out viable gap up hunting season does not appear to be open. And then it's all going to start over April 1st. We'll have another 45 days of earnings, so which can, of course, drive volatility too. I did mention last weekend, I left the slide in here, the TraderLine IPO class is still going on. These are recorded, so if you sign up late, you get them all, you get the presenter slides. They've been really good. There's a lot of trading information, a lot of screening information that goes beyond IPOs for some very skilled and knowledgeable traders, but particularly in the IPO world. So our meeting is this Thursday. That's the long monthly meeting. You can register at the Stockyard Meetup site. Tuition is $12. If you've never come to one of my meetings, I send you a courtesy copy of the last month's meeting, recording, slide deck, and everything when you sign up. You do not have to attend live. As long as you're signed up, you'll get the recording and everything. Here's the agenda. So we're going to look at the M factor. Obviously, we'll have more news on the bank situation by then. We'll do a Canslim teaching nugget session that I always do. Talk about new stuff in MarketSmith if there was anything new. Educational topics, we'll continue to look at Friar Battery, which is a short thesis, sort of focus on just 24M technology, the technology they've licensed this month a little bit. That won't be a super long session. We'll look at any buyable gap up since the February meeting, where that was our big educational topic. And then the main educational topic for this week, we're going to walk through Jim Ropel's Ride the Wave, plan weekend routine or template. So sorry about that. Look at the group teaching portfolio, which we glanced at, not much to look at. Talk about any recent or upcoming IPOs that I may be aware of, and we'll do open mic chart reviews and stocks you guys ask about. Prior monthly meeting recordings are available. If you don't have a written set of sell rules, this comes up so much that I did a 3-month series on that. And then I also did 2 months on a complete weekend routine. So questions, contact information. You can join both the meetup sites, Greenville Eastside IBD meetup, that's where all the resources are. And then the Stockyard is where you sign up for meetings. That's the only thing the Stockyard is really used for. You can email me if you're interested in ordering prior recordings. I'll send you the list and ordering instructions. You can follow me on Twitter, where I put up the coloring book almost every day. Sometimes life interferes a little bit, but I catch it up the next day. And then you're on the Stockyard by Greg Morton YouTube page if you're watching this. So there's a lot of things in there, weekend reviews, teaching on how to use the group teaching portfolio spreadsheet, a video on the 8-week hold rule, which is really an exception, not a rule. So a lot of stuff to review there. So that's it. Have a good weekend routine. I'm out of here.